Hey guys, it's Richard. Want to make a quick video on two different, strategies that you could use or models that you could use when trading Goldbach. You know, when I say I trade Goldbach, I do, but I need something else to have some confluence with it. I just can't trade Goldbach by itself. All right, so this is price action on May the 30th. That's Friday, May the 30th, 2025. And right here, where the from the blue and the white, this is the New York market open. All right. So if I come in and I put on my Goldbach indicator, and I always set it at 243 to start with, you know, in hindsight, it looks pretty good. Hey, we're on this side of the partition. We went to this side, and then price continued to go to the other side of it. Okay. So you're like, okay, well, that's pretty cool, Richard. But what else could you use? And there's a couple of things that you could do. One is using the ICT macros. Okay, so I'm going to remove or just turn it off the Goldbach level indicator, and I'm going to use this one called fair value gap in macro. So it's only going to put the macros on the price chart, the ICT macros that's, you know, start 10 minutes before the hour and end 10 minutes after the hour, especially in the morning session. And it's only going to mark out the fair value gaps inside that space or that time, and it's only going to mark out the first fair value gap inside there. You could draw it yourself, but I have this indicator. It's free. It's part of TradingView, and it's called fair value gap in macro. All right, so I turn that on, and as you can see, so let's just kind of walk through this. Before the market opens, there's a macro that runs from 850 to 910. The very first fair value gap is here, obviously, where you see the yellow. And you can see that price came in and almost tagged it, may have tagged it right there. It tagged it here, came down, then tagged it here, came in. But eventually, after the market opened, it broke through it, came back, retested it, then came down. Now, the way I trade the macros is that when another macro is about to start, I don't want to be in the trade. I want to see what happens. But then on the next macro from 950 to 1010, the first fair value gap, didn't count the first candle, it's the next candle. So not the 950 candle, but the very next candle. It had an inverse fair value gap, ran all the way, and you could have held on to it till you got near the next macro. Then at the 1050 macro, this was a very small fair value gap, but if you look here, there's actually a larger one that is here that would probably be more dominant than that little small one. So, I mean, you have to do some, you know, you do have to look at it. You just can't trust the indicator to give you the best option. So, and if you trade fair value gaps, you would have obviously saw that was a big displacement on both sides. All right, both buy side and sell side. So, it respected here, came on down and bottomed out about where the macro was going to start at 1150 to 1210. Here was the first fair value gap. It was an inverse fair value gap, came back and retested it, and then shot all the way through. I have extended these previous first fair value gaps for each macro to go out to the right some. As you can see, this one came down, paused on it, and then we had that close just below it, a retest of it, and then it shot down. Boom. Okay. And I'm sure if you had MACD indicators or RSIs, that would have been screaming divergence. There was probably SMT on this if you'd have been comparing it to ES. I don't know. And then we go to the afternoon macro, and this is not as clean as the other ones. However, this was the first fair value gap. We ran through it several different times, but as price decided to pick a direction, it came back and retested the CE of that fair value gap, then went all the way up till it got ready to start the next macro. First fair value gap, inverse, boom, go all the way up till you get ready to start the next fair value or next ICT macro. And then here we had a fair value gap that kept holding, and it was just the end of the day. And you know, it shot up and took out liquidity at the high. So, and that was the end of the day. So you're like, okay, well, Richard, that's trading ICT macros. How do you put Goldbach on it? Well, let's put the Goldbach indicator back on there. And as you can see, we know that we're in premium up here and we're in discount down here. So when we were looking at this fair value gap, we weren't looking to go long because we were in premium. We were looking for to go short, so we were waiting for a sweep of that fair value gap. Here we got it, but it didn't carry through. Here boom. And then we would have traded it down. I would have probably tried to hold it all the way down to here. But this is why other people that trade Goldbach say, hey man, if you can trade two contracts, you want to take one off at equilibrium. And that would have been a wise choice. But then as we're here, we're at equilibrium. We could have played it back up to the top part. Then again, we play it here at the top. And we could, if this one, in hindsight, we could have held it all the way down. But even if we did, if we got out right here, we could have got in right here and held it all the way down. Now we're in discount. We're looking for a, a bullish break from the fair value gap. And, it was, like I said, it was kind of dirty in here. Didn't do us any favors, that's for sure. But then we finally got it here. And if you didn't get here, you could have got a retest of this block right here. All right. And then there was other fair value gaps that it's not showing up on here, but because I only have this indicator that's marking the fair value gaps inside. Okay. Same thing here. Now I probably wouldn't have got in this because we're in premium, and in premium we should be looking for shorts. Except for I was thinking, well, maybe it would go all the way there. Now, I didn't trade this Friday afternoon, but I just thought it might be helpful. Okay. So I'm going to show you one other thing that I've been playing with. And it's using what I consider the power of 3 on the hourly candle. Okay. So let's take this off. And I really like the 9 to 10 candle. Okay. So that's before the market opens. And I mark out the 9. And I use these settings on my time. I have to 920 or 33% is accumulation, then 33 to 66 is manipulation, then 66 to 83 is distribution 1, 83 to 1 is distribution 2. All right, so what I like to do is go from high to low of the accumulation, draw this out, and then we see we clearly manipulated here, and then we came down, we retested it, came down, and now we're in the second distribution. We know that now this hourly algo is done. Okay, so then we shift over here. Let's erase all this. Before we do that, let's put the Goldbach indicator back on there, and you can see it's lining up perfect with the top of this. And I haven't done anything except select a 243 power of 3, and it kind of frames everything. It's giving you more confluence. Let's just put it that way. All right. So let's erase all this and let's do the next candle from 10 to 11. I'll get it there in a minute. Bear with me. All right, I'm going to do the same thing. I'm going to go from the low to the high within the accumulation period. Now I'm looking for manipulation in here. And we get it here. We get it here, we get it here, we get it here. And then we got first distribution, second distribution. It was a little bit sloppy. That would have been hard to trade. I guarantee you wouldn't have made very much money, even if you were like dead on every single time. Okay, on your entries. So let's go to the 11 to 12. 11 to 12. We're going to do the exact same thing. High to low. Manipulations here. We manipulate it. Came all the way down. And then we got into distribution 1, which was kind of a consolidation. Distribution 2 and 1 was going up there. Okay. And it went right to the CE of the accumulation period. All right. Let's get rid of that. Let's do the 12 to 1. All right, we're going to do the same thing. We're going to take the high to the low in the accumulation zone. We're going to do like this. Well, guess what? We didn't get a manipulation of that. We just come blowing out. Okay, and then you could have taken this as a fair value gap and off of this breaker. But like I said, this would probably just be a trade that I missed using this model. Okay. So let's go to the next. But if you put on Goldbach, may have helped you frame it a little bit better. I don't know. All right, so let's take that back off. Let's take these off. Let's go from 1 to 2. We're going to do the same thing. Do we see anything that's a manipulation? Possibly, if you want to count that as manipulation. And then we came back in, and then we had a distribution 1 with a distribution 2. Okay, so really, it's almost like 3 distributions. 1, 2, 3. So that would have been hard to trade. Probably not a good one. Okay, let's remove that. If you notice, the good trades were in the morning. 14 to 15. All right, we're going to do the same thing. The high to the low. Why don't you? All right. The only manipulation that I could possibly see right here is that we manipulated this low right here. Right here. Not really. I probably would have been stopped out on this because I would have thought this was a manipulation right here. But then on distribution, we came down. We never broke the low of manipulation. And then we distributed up. Okay. So that's kind of what you could do. There's 2 different ways that I showed you just now. One using the ICT macros in the first fair value gap. And then the other thing is looking at the hourly candles, the power 3 using accumulation, manipulation, and distribution. All right, so anyway, I hope that's helpful to you. On this particular day, I actually preferred the fair value gap macros. It was a lot cleaner, especially in the morning. But, you know, not every day is going to be the same. So keep that in mind. Anyway, I hope this is helpful. If you like what we're talking about here with Goldbach, we have a Discord channel. There's a link in the description of the channel. You can join. It's free. Everything in the Discord's free. There's no paid mentorship. There's no paid indicators, nothing like that. It's a place to come in and learn how to trade Goldbach, share what you know, learn from others. And, you know, like I said, we're always looking for some confluences. There's a couple of people, more than a couple of people that are actually using Goldbach time instead of the Goldbach levels, and they're incorporating the 2 together. Come learn. All right, we like to trade live together, sometimes on Mondays and Tuesday mornings at the New York Open. Like I said, everybody's welcome and it's free to join. Talk to you later.